Let's get more on these banks. We're joined by Richard Fogler, Managing Director, Chief Investment Officer and Portfolio Manager at Kingwest Company. Thanks for joining us.
Pleasure. Thanks for having me.
Any salient point in the CIBC earnings? Anything interesting?
It was good. Particularly good at capital markets. Capital markets are up 87% or something. So that was really good. But the whole thing was good. They just did a good job throughout the quarter. They're just moving along nicely.
Provisions were up something like 13%. Is that a worry for you?
Yeah, well, it's all last year to this year. The provisions were, they're down from last quarter. They're from last year. It's,
And the earnings estimates, I mean,
they beat it by
16 cents or something.
Yeah, something like 16 cents. It's good.
2.16 versus a consensus of about $2. What about CIBC though? Have these bank stocks? I mean, they've been hitting records this week. The group are they overdone right now? Overheated?
I don't know that they're overheated, but they're certainly they've moved up a bit. But they're not up that much this year relative to the market. A little bit more. CIBC, I think, is up 16%. What's the market up this year? Canada's 7 or something.
Something like 15%, excluding dividends. Yeah.
So they've moved in line with the market.
Yeah.
Nothing. It's not a big deal. The question is the follow-on question to that is the market overvalued?
Is it? Do you think?
I have no idea.
That's a good question. Yeah, that's a good answer. Yeah, I mean, stocks are worth what people think they're worth to a large extent.
Stocks trade. I mean, J.P. Morgan was asked in the Pecora Commission, 1936. He was asked the question, "What will the market do?" And he looked very solemnly at the interviewer and said, "It will fluctuate."
Yes.
And in the short term, it's as good an answer as you can get. In the long term, it's going to go up. It goes up in an uneven pattern, but over the last 50 years, it's gone up 10% a year, roughly, both in Canada and the United States. So, the thing to do is, I think, others trade the market. We don't trade. We're long. We buy and hold for long periods of time. Our average holding is about 5 years. We want to get that sweep of the market going up, and if it bounces around a bit in between, we can't guess whether it's going to go up and down. So we just ignore that part, trying to just understand what the businesses are going to do and how well they're going to perform within it.
Sorry. Of course, the market can be dead money for long periods, but it's rare. I remember at one point in the financial crisis, March of 2009, as we came out of it, the S&P 500 did have a 10-year negative return.
To 1998 to 2008, the market was blotto. And 1966 to 1982, the market was down. That's a long period.
Wow.
Market peaked at 1054 in 1966, and it didn't reach that level until I can't remember, August or October or something of 1982. Right. So you can have long periods of difficulty in the markets. Although I will point out that Warren Buffett made his greatest returns in the 70s when the market essentially went straight sideways. So there are lots of opportunities within a dead market too.
And of course, evidence shows that dividend stocks can be great to hold over the long time.
Dividends account for about 30% of I believe, of returns, maybe more.
Yeah.
And so, having a company, but when you talk dividends, is it the dividend today or the ability to generate a dividend over the next 10 years?
Yeah.
And
what about TD? Did anything jump out for you?
No, TD was the same. Not quite. TD did well. Not quite as good as Commerce in each area, but it did well. It did well throughout. They've got the AML problem behind them. Their expense ratio was not a bit out of line, but not serious. It was fine. They've got a ton of excess capital. That's the good news. The stock's doing crummy today, I notice.
Is there any catalyst for these banks being down today?
I don't think so.
I haven't seen anything.
TD bounced a bunch yesterday. Yeah. I mean, it's the same thing. It outperformed by something like 20%, or outbeat expectation by about 20 cents. But everybody, we're now at the end of the week. Everybody beat the expectations.
Except National, I guess.
Except National. Yeah. That's true. So, and so what's happened is as you went through it, yesterday TD got the bounce for the expectation beat. And now they've all gone up, and today that's the only thing I can think of is today they're correcting off the it's not that big a deal. They don't get, they really shouldn't have bounced that much. TD's up 30% this year, unlike the others. Now,
Sure.
it was hampered by the AML thing for the last couple of years, so it's,
Sure, come back.
correcting some of that. But
Yeah. The viewers are sick of me asking this question, but is there a case to be made for just putting all your money in the Canadian banks and forgetting about it?
So I have a couple of friends who used to work for banks, retired, or in a couple of cases fired, but that's all they own is Canadian banks. And I'm not going to sell them. They raise dividends 5 out of 10 years. It's an income stream that'll last forever. They grow it, roughly in line with the market. I don't have to think very much. I've got 90% of my assets in that.
Well, what your friends say?
That's what they say.
Yeah.
Now they work there and everything else,
Sure.
and they'd have to pay. You remember if
Big capital gains.
they'd have to pay a big capital gain. They couldn't. They're getting 4 or 5% dividend yield. If they sold something, got 75 cents instead of a dollar, they'd have to get 7% to get the same 5%. So it makes no sense to sell. But the fact is, if you'd held the banks for the last 25 years,
You'd be happy.
You'd be very happy.
Richard, thanks very much.
It's a joy to be here. Thank you.
Richard Fogler, Managing Director, Chief Investment Officer and Portfolio Manager at Kingwest Company.